Hi, welcome to Neppy Invest. So one of the added benefits I've found on doing these YouTube videos is I am researching companies that I may not have researched before I started doing these videos. And the company I'll be looking at today, PayGroup, definitely fits within that group. So their ticker code's PYG. And based off this Appendix 4C, I decided to do a video just looking at it. And because I had to start doing a video or preparing a video, I did do a little bit of research into the company. And that little bit of research, not a lot of research, but that little bit of research has given me the impetus to actually go into a little bit more depth of a research into the company. And the reason I want to do that more in-depth research is a few little facets I've found. So PayGroup is a human capital management SaaS and software with a service provider. They're primarily focused in Asia. I think 70% of their business is in Asia. They have sort of three divisions, and one of the divisions is situated in Singapore, and so I think 90% of that business is in Singapore. But the other main thing that really got me interested in this company was they have annual recurring revenue of 17.8 million, which has doubled from the previous year. And typically what I like to do is I times the annual recurring. This is a very simplistic way of looking at valuation of a company, or SaaS company anyway, is I just times the annual recurring revenue by 10 times. So if it's 17.8 million, times up there by 10 times, that gives 178 million. And that's sort of a rough guide to judging how the market is valuing the company. So the market cap of PayGroup is only 42 million, so it's significantly less than 178 million, which suggests to me, based on the fact that annual recurring revenue doubled in the past year, that the market may be undervaluing this company. And one of the reasons they may be undervaluing the company is simply because they're primarily focused in Asia. I think companies that are focused in Asia do have a bit of a discount applied to it, because especially companies in China, there's a bit of a bad taste about companies that have in China that have come and listed on the ASX, and then within a few years have just disappeared and have, lost their investors quite a bit of money. It's happened a few times, and there's that sort of perception that there is a bit of risk with Asian companies. That's not always the case. But anyway, their operating cash flow, the reason I wanted to do this video in the first place was they were operating cash flow positive for the quarter. Receipts for customers $4.2 million, and operating cash flow positive to the tune of 1.1. And even if you take into account the fact that they did get government grants and tax incentives, if you take that away, they're still cash flow positive to the tune of about $500,000. So that's positive. And then next thing I look at is always the trend in receipts, and the trend is up. Even if you take away that April 19 spike in cash receipts, I don't know why that happened, if that's usual. They did mention, I think, in the report that they do see a spike in February for some reason. Something about the 13th month in payroll. I don't understand that. But generally the trend is up, and that's a good sign. Some of the other things about the report that had me interested, they had $5.4 million in contract wins in the quarter, and their total contract value in financial year 20 was only 5.5. So they are starting to win more contracts, getting more business drumming up, so that's always good. And 70% of their sales in the first half was in Asia, so they are, again, Asia focused. Do have cash of $5.3 million, so even though they have a market cap of whatever I said, 45, that's enterprise value of something like 40 million, so they're even cheaper than that. And they did do a capital raising. And then I just, down there is what they've mentioned, something about the customary 13th month payroll processing that occurs throughout Asia, typically in February. That's why quarter one results are usually benefited from that. Share price wise, so yeah, nothing much happening. So they listed on the ASX in middle of 2018, around about, I forget what it was, but it would have been around about 60, 70 cents or so. And they really haven't done much. They closed, the share price closed around 55 cents when I did this slide. So really not much. In fact, you could range trade this. It looks like the top of the range is around 90 cents and the bottom of the range is between 60 and 50 cents. And we're in that bottom of the range now. So you could actually have a bit of a short bit of a punt on this, and if it goes towards 90, maybe sell. If the share price gets above 90 cents, that would be quite bullish. And if it gets below about 50 cents, that would be quite bearish. And right at the bottom there in the volume, there is a bit of volume getting into the buying into the company in the last few weeks. So that's actually quite bullish as well, especially since we're towards the bottom of that trading range. And this is, I've got 1 year daily. This is actually, looks like 6 months daily. And we've seen the peak of share price in June reaching 90 cents. So not a lot of interest, even though share price did rise a lot. If you look at the volume there was not a lot of volume with that share price rising. And that's actually quite bearish. I don't like to see that. I prefer to see quite a bit of volume when the share price starts ticking up like that, because you need a bit of support with the buying, and the buying always seems to drop off in that sort of situation. And lo and behold, we did see the share price start to go down. A really good trend downwards from that high price all the way down to about now. And the share price has been leveling off the last few weeks on increasing volume or higher volume, which suggests to me there's a lot of churning. There could be some fund managers buying in right at these prices. So around this price might be a good time to buy. I will be doing a little bit more research in this company and perhaps putting a little bit of a bid in. So that's all I've got on PayGroup. The ticker code is PYG. If you are a shareholder in PayGroup, maybe leave your thoughts behind. So I'm always looking for some feedback on companies I do. And again, I'm not 100% across this company. I want to do a little bit more research, maybe do maybe another video on PayGroup, a little more in-depth video on this company, because it has raised some, piqued a bit of interest in me. And that's all I've got on this video. So again, I'm not a professional or professional advisor, I probably should say. So if you do need to seek out professional advice, make sure you seek out someone who is qualified and knows what they're talking about. Not that I don't know what I'm talking about, but sometimes I don't think I do know. But anyway, have a good day. See you later. Bye.